this computer. Has it started? Yeah. All right, welcome everybody. For those who don't know me, I am Shane Trades, a co-founder of TraderLink, and today's class is sort of a mix-up. We're gonna run into some basics of Vanna as well as how to read these magnet and repellent effects. On top of that, we're gonna get into the footprint, and then following that, we'll get into volume profile as well as the Fibonacci retracements that I use. So let's get started. So for today's Vanna stuff, I'm gonna just read it off and so everyone knows. So what is Vanna? So Vanna is actually the sensitivity of an option's delta with respect to changes in implied volatility, or otherwise known as vol. So let's go over that, right? What to really look out for when, looking at the Vanna graph. So similar to GEX or gamma exposure, we always look for, the high exposure areas or high exposure strikes. So the very basics of everything, right? Let's get into it with this one, right? We have our horizontal axis, and then let's go over the Vanna curve. So it's always going to look something like this. Don't mind that this slope looks like a lopsided titty, but it is what it is. You guys can visualize. So obviously pretend this is the peak. Sorry, this is a really poor drawing, but pretend that we're at the peaks. So Vanna, obviously, right, as you've heard me say time and time again, has the biggest effect when the deltas are at 0.2 or negative 0.2, right? It doesn't matter which end you're on, but that's the basics of it. And when you're looking at these large exposures, right? So this is the Vanna curve, obviously. So when we're watching this, the deltas are at 0.2 or negative 0.2. Those are the strikes that we really want to look out for. So when we're looking at the Vanna graph itself, right? So we'll zoom in here. Actually, I might take a screenshot of this. So when I'm looking at this, oh, but the screenshot thing sucks with Mac. Realizing that now. But anyway, so what are we looking at? So one thing for Vanna that I like to watch is this one right here. And that's really it in terms of how big the exposure is. Maybe this one will play a role, right? So these two. So with that being said, that is the 47.30 strike and the 47.80 strike. And we are currently sitting at 47.60 or 47.58 is where spot price is. So with that being said, what do we do now? We've identified both of those, right? 47.35. So actually we'll write it on this one because it's black background. So 47.35, right? And then 47.80. So what are we watching out for? Largest bar too far out the money. I mean, it's kind of like that, but it's pretty much the main focus is, okay, look for the largest bar. Then you go into looking at what is the delta of said large bar. Is that delta at 0.2 or negative 0.2, right? If you're looking, if the bar is above, obviously you're going to be looking at call delta. If the bar is below, you can look at put delta. If you want, you could also look at both of them. 0.8 and 0.2 is sort of like that balance area in which you look for. It's basically just 0.2 away from the top or the bottom of the, the decimal. So with that being said, when we're looking at this, right, when we're currently sitting at 4, 7, 5, 8, right? So these are the main strikes that we'll be watching down here. And we are in between both of them right now, right? So let's take a look at the options chain. I'm going to pull it up on my phone here. And then just take a look at the deltas of each one. So let's open up SPX. So this is obviously utilizing tomorrow's data, which will be January 10th. So 47.35 put, right? Let's see the delta on these. So this one has a delta of negative 0.22, negative 0.22. So we can obviously understand that this may have a potential effect going into tomorrow. Then the next one is the 47.80 call. And this one has a 0.14. So in this situation specifically, what are we watching? Obviously, here's the case that I see. As of right now, the one to pay closer attention to is going to be the 35, right? Why? Because we're closer to 0.2, right? That 0.2, negative 0.2. But there's a big but here. Obviously, as the stock price moves up, right? The delta of this contract will actually decrease. The contract itself or the strike itself will go further and further out of the money. So when you consider that, obviously, as a strike goes further and further out of the money, what happens to the delta? The delta decreases, right? So especially for puts specifically. So when you have the delta decreasing, when it hits that 0.2, or even right now, you want to consider one of two things. Number one, this contract is, what do you call it? 47.35 is currently out of the money, and it is positive below spot. And once again, that screenshot that we talked about, that I always look at, as I said to you guys, I don't have it, like I said, I don't have it perfectly pulled up every single time, right? Or memorized in my brain. I just look at it. All right, so with where we're currently at, and we have positive below spot. When we have positive below spot, what happens? When IV increases, so if IV up, IV up, this becomes a magnet, right? So positive below, IV up is magnet, positive below, IV down is repellent, right? So repel, rep for short. So with that being said, as we're with where we're currently at, now after you've identified the situation, the delta, what happens when IV goes up, what happens when IV goes down, the next step is to now look at IV itself, right? I'm actually going to pull up TradingView on this chart too. So I can view VIX, view, so much shit here, right? So let's take a look at VIX, right? This is a good way of indicating if you can obviously read price action. Large bar doesn't mean highest vol, right? No, small bars actually represents high vol. Large bars represent low vol. But as of right now, that hasn't been what I've been using. I mostly watch this because I think this has more importance than whether or not a bar is going to be high vol or low vol. But continuing with what I'm talking about right now, how I like to go about certain things is identifying whether or not VIX is looking primed for a reversal, right? Or if it's going to keep falling. With where we're currently at, now we look at VIX, right? Okay, is VIX at a resistance or is VIX at a support? So look at this, right? We can just draw a line here. VIX is at a previous resistance, right? Obviously, we have rejections here, we have rejections here, we have rejections here. You know, we have previous support rejection. So as you can tell across the board, this is a relative SNR, right? So the other thing to consider is, okay, if VIX can break below that, it can possibly get down to this level, right? The next one is obviously much lower, right around here, right? So now you want to figure out ways to see if vol or VIX will push up or push down. Then from there, you can determine whether or not the Vanna effect of this strike is going to pull the strike down or push it back up, right? Is that slowly making sense? I'm trying to explain it relatively slow so that you know, you can put two and two together, right? So this is I'll be honest, this has been my absolute breadwinner for the past 2 weeks. Identifying these Vanna magnets, especially now that it is back in play after the week after OPEX, or well, yeah, the week after OPEX, and the week coming up to OPEX and whatnot. So this has been one of my absolute favorite things to use. So I want to make sure people understand it, right? Because it's very, very important and it can change your outlook on the market tremendously. So in this current moment with where we're at 47.58 with this negative 0.2 delta area, right? The next step, as I said, is to identify whether or not volatility, VIX, will increase or decrease in order to get a relative gauge of whether or not this strike or this Vanna exposure at this strike is going to pull or push the market up or back down, right? So that's the next thing. Let's say, for instance, this is going to create a repelling effect. Volatility VIX manages to break right through here, right? Volatility goes down. Market starts pushing up, right? What is the next strike? We already labeled it 47.80. The delta is at 0.14, but guess what? Very similar situation when the market goes down on a put strike, the delta increases, right? If the market pushes up, this 47.80 strike price call will pick up in delta. This delta right here is going to increase. So when it hits that 0.2, right? So this effect is going to lose it's going to lose its effect as market pushes up, right? So as the market pushes up, right? This 47.35 strike is going to have less of an effect. This delta is going to start picking up, and now you want to watch the delta of the 47.80, right? What's the next thing as we showed, right? If VIX is dropping, right, and this delta hits 0.2, so let's say this now goes to 0.2, and we pushed up to, give or take, we'll say 47.65, right? So now we're at, instead of this, we are now here at 47.65 with the delta, right? 47, we'll do 47.67, a little more where the delta is closer to 0.2, right? So now let's say the delta is at 0.2 for the 47.80. We're at 47.67. We've pushed up roughly 9 points, right? With that being said, now what happens? When you look at this earlier, right? This is technically now negative above spot price. And what happens? Once again, I refer back to that spreadsheet or that screenshot of the spreadsheet, and now I determine what happens. So we have negative above spot, and guess what? When IV increases, right? So for this situation, if IV increases, what happens? IV increase on negative above, it becomes a magnet, right? So this becomes a magnet. If IV continues to decrease, right? IV decrease. So obviously, as we talked about, VIX is coming down, right, in order to push this up. Because that 47.35 repellent effect will push the market up and continue to push it up. So if IV is going down, this will create a repellent effect, right? So now let's determine what happens to IV. Let's say IV or VIX has pushed back down, right? So we are now right here. So imagine VIX is right here, right? We're at another support level. Let's take this into consideration. Support and resistance, obviously, you want to see what happens to volatility. If volatility breaks through that support, that means VIX breaks through that support, that means vol is going down, meaning that this 47.80 strike will repel, and meaning market dealers will have to sell as their hedge. So as they're selling, so now we're in this situation between 47.80, between 47.35, and we're both repelling. And what does that what happens when you repel between two strike prices? It creates that pinning effect, right? As I'm talking about, it creates that pinning effect. So that's sort of what we're talking about here. Does that make sense, guys? Please tell me that makes sense, because I feel like that explanation was a fucking one. No, price doesn't necessarily have to get to 47.80. It's when the delta of that strike, right? When it's the delta of that strike on bond exposure hits that point, that 0.2, right? So if vol decides to push up, let's say volatility instead of breaking through that support on VIX right here, instead it goes up, what happens? We will start to magnetize, meaning we will continue this push up. Dealers will continue to buy as their hedge alongside market makers and push this up, right? So it's understanding the situations in which VIX sort of plays a role, right? And it's understanding how the movement of VIX can affect the market, right? It's the volatility aspect. And this is just the reason why I said in an earlier video that I use more of the options chain, but as I've tested this more, VIX is a lot more reliable because for one very specific reason. It's not so much the volatility increasing or decreasing, it's being able to put your money on the bet, right? It's like, okay, I think if you're reading another chart, you can, analyze it and be like, you know what, I think this is going to bounce, right? Then you can expect a different move and then play that move, right? You're not going to know whether or not VIX is going to break or bounce that level, right? But it's, taking the risk at that chance and kind of going with it. Sorry, I gotta send this link to someone. Delta on puts or calls have to be pointing. Yes. Can Vanna determine the magnitude of that reversal? Yes, it can, due to whether or not how much exposure is at that level. Does that make sense? Like the bigger the bar, the bigger the more the dealers have to end up selling because they're hedging because their exposure is too high. Does dealers always have to hedge at 0.2 delta? For example, you mentioned it go beyond 0.2 and reach. Yeah, so that's the thing, right? When the how do I put it? When it's there, the impact is the most significant at 0.2. So that's when they sort of, obviously they're always hedging. So I'm not going to sit here and tell you they're not always hedging, right? Because they're hedging on multiple accounts, whether it's gamma exposure, Vana exposure, charm exposure, right? But as for Vana specifically, like the main three, right? Gamma, Vana, charm. So that's sort of the well, yeah, that's it for that. But I don't want to touch too much on it. If you want to go back, I really suggest that you review this session because I didn't realize how good it was going to be, if I'm being honest. That shit was absolutely fucking fire right about now, if I'm being honest. That was a good example. It's a very good example. Any suggestions for precisely measuring vol? There's not a way to really measure vol. You can kind of make the assumption, right? I talked about many ways. It's sort of um, yeah, I can read questions out loud for recording purposes. I will do that. So there isn't an exact way to tell whether or not vol is increasing or decreasing. However, going into it, it's like you can look at the options chain to see if vol is increasing or decreasing. But the thing is with the options chain, talking about intraday structure of volatility as a whole, right? We've been through the standard of it. It's the at open volatility is always going to be higher and it's going to slowly bleed. And then anywhere between like 9 to 10-ish, it's going to push up. Holy, that is a long one. Oh, okay, that's not a question. Thank goodness. I was about to say, Jesus fuck. That was a question. I'm not gonna read that out loud. But so best supplies, yeah, always use it on SPX. You can use it on SPY and like QQQ, but if I'm being honest, SPX, the reason we watch SPX is always going to be the fact that it takes up 16% of the options market cap, right? It has the most weight. Dealers are always hedging it the most. How to use the options chain to measure vol? You just look at implied volatility. And when you're looking at implied volatility, okay, so there's a different way of measuring it, and I showed this a couple times, but it's not entirely um, the, the, the best way. Let me open up a new spreadsheet. So you can just track volatility essentially, right, on your own. So when you're tracking volatility on your own, it's going to be like, okay, at 6:30, you take the options chain. Options chain was at 18% earlier today when I was looking at it. Okay, now it's 7 o'clock. When you'd look at the option chain again, they dropped to 17.5. 7:30 comes, they're at 17. So it's just always, so there's a way to track it like this. Then you can just take these numbers. We're just going to fill in some of this 8 o'clock. And we'll do it like 15%. And then 9 o'clock comes, obviously volatility. We'll consider it relatively dead and we'll be at like 12%. Then 10 o'clock comes in. Then we'll go into volatility starts picking up again. We'll go back to 15, 11, volatility comes in again, right? It starts increasing as you get closer and closer to power hour. So at power hour or leading up to it, let's say we're at 16. Power hour comes now, and then we're now at what do you call it? Well, we'll call it 18%. We're back, right? Okay. So sorry, continuing forward, 1 o'clock, or sorry, now what you can do is you can just, if you really wanted to, you can just graph it out, right? Oh, let's, you know what? We're not going to do it like that then. Sorry, brain fart, insert chart and then line chart, right? So you can kind of track volatility like this, right? Okay, at X time, it's dropping, dropping, dropping. So like this is just another way to measure it. You don't have to do it like this. I don't suggest you do it like this. How do you determine if they're hedging and not repositioning? You'll see if they're repositioning, you'll see the exposures go down. Excel's a lot of fun. I love Excel. I pretty much do all the Excel sheets for our company, so I'm pretty much on that. and also my previous job is always like looking at Excel sheets. This is you referring to 0.2 on the vol chain. It's different options. This is you referring to the 0.2 vol option chain as different vol for different option chains. Sorry, you're gonna have to clear up that grammar, bro. Yeah, fake Excel. Don't react to cat stuff. She's trolling me. She's my friend. Um, does dealers always have to hedge at a 0.2 delta, for example? No, like I said, they're hedging all the time for different things, but for Vanna specifically, the impact is going to be the most when those deltas hit 0.2. All right, enough about Vanna, guys. You can rewatch that section. We're gonna go into the footprint because footprint's cool. Footprint, what do we watch out for? There's certain things, right? As I talked about on stream today in the morning, when we got that absolutely perfect trim, right, on SPY. Obviously, another thing, when you're looking at the footprint chart, guys, you cannot use SPX. Why? SPX doesn't carry volume, so you have to stick to SPY. If you're watching anything related to SPY and SPX and ES, you use SPY. But getting into it with footprint, what do I always talk about? I'm talking about this delta right here. Each candle carries a different delta. And obviously, when you're looking at these candles specifically, what do you see? Number one, this is a green candle. I think someone on stream earlier was, I don't know if he was like trolling me or not, and he was saying like, how do I determine whether or not one's green or red? That's how. So green candles will show negative delta. Why? Because the divergences, right? So when you have that negative delta on a green candle, obviously majority of the times, most people, most new traders come in, they see a green candle, they think bullish, right? However, digging deeper into the transactions in said candle, they were obviously more sellers, right? With this negative delta. Going into this one, we have a red candle with a ton of green positive delta, meaning there are a lot more buyers. Same thing with this one, red candle, a lot more buyers, right? So that's what I really watch out for. I usually like to look for 3 to 5 of the same thing. So 3 red candles, let's say for example, we have 3 red candles, and I want to see positive deltas on the 3 of those in order to find a potential long, right? How can a candle be red if there are more buyers? Shit, that's actually a good question. I don't even know. Transaction wise, I want to say it's based upon whether or not they fill at the bid or the ask. Because keep in mind, both transactions, there's always a buy and a sell side. There's 2 people in a transaction or 2 parties. But yeah, so with that being said, that's usually what I watch out for in terms of on a daily basis. That's what I'm looking at. As for finished auctions and unfinished auctions, I usually watch the 5-minute and then I'll flip to the 15-minute. So if I get 3 red candles and they all have positive delta, I'll flip to a 15-minute and see if any of the previous ones show something similar. But I'm always mostly intraday watching the 5-minute. Like the first I want to say hour, I'm watching the 5-minute, and then I'll flip to bigger time frame, and then I'll switch to the 15. But continuing forward, the next thing is unfinished auctions versus finished auctions. Finished auctions will have a 0 at the end of it. Oh, why did that? There we go. What do I mean by 0? Something like, okay, all of these are unfinished auctions. Oh no, not entirely true. Right here. Finished auctions will look like this, right? Unfinished auctions are like this. Right, guys? That's what this looks like. So finished auctions at the top. So unfinished auctions tend to like to get revisited. Well, and when they do revisit, the most important part about it is you got to think about it like this. If there's an unfinished auction, right, it's unfinished for a reason. That means there were a bunch of limit orders left there. They were left at that bottom area, right, of this candle right here, right? They were left at the bottom, limit orders ready to be filled. So when you hit that area, let's say it's on the bottom for an unfinished auction, that means that there are going to be limit orders to probably buy. And when those limit orders are there to buy, to be or set to buy, what happens? You get a bounce. So unfinished auctions are always solid areas to get trims. And you guys saw that perfectly on stream today. You know, I got into puts and then I said, okay, SPY 472.3, unfinished auction, that's going to be the place that I trim. And we bounced right there today. I was actually very happy that we bounced right there because I was like, where was that? And then things to consider, right? When you see a footprint like deltas, I take those as signs to get the hell out, right? That's the same thing we practiced and we executed that on stream today. So that's the other part. So got lost for a second. What am I looking at for unfinished auctions? Unfinished auctions will look like this. We'll have like two numbers. Finished auctions will look like this with a 0. So finished. Oh goodness, the lag. So this is a finished auction. This is an unfinished auction. This is an unfinished auction. This is a finished auction. Unfinished. Unfinished, unfinished, finished, unfinished, unfinished. Is there only that's just in this example right now, there's only 0 at the top. You'll see once again, it's just we're populating with only, you know, 1, 2, 3, 4, 5, 6 candlesticks. So it's a little bit you know, we're working on that though. I swear we're working on it. In terms of getting more historical data where you can scroll all the way back. So 0 at the top or bottom means finished auction, correct. What made you get into puts? 2 green candles with negative delta? Yeah, so well, it was green candles with negative delta, and I was like, okay, that means there are more sellers. Then when I saw this one build up on the 15-minute earlier, something like that I saw when I was taking a position, I saw positive delta on a red candle, and I was like, okay, this is my sign to get the fuck out. So the candles that have no deltas, okay, so like this, right? As I said, the deltas only populate on our chart when it's a divergence, meaning there's a green candle with negative delta. Red candles with no delta at the top means that there was negative delta. Yeah, that was literally a perfect exit. So I cannot complain. I mean, the contract's at 5.1 and I sold out at 5.0, so that was a perfect exit. But yeah, so moving on to the next thing, right? That's 2 out of 4 things on our agenda today. The third one is going to be volume profile. This is like for everyone who knows, volume profile is the absolute game changer in my trading in 2022. The absolute, yeah, VP is the bee's knees. With VP, it's going to, I want to use this chart, dang it. I'll use this one. VP is going to be the absolute most basic thing that I watch out for, or that I watch out for. So this is, if you're going to pay attention to one damn thing today, this is going to be the one. Like volume profile is the absolute best. When it comes to volume profile, what do we watch out for? There are 2 main things. But before we get into those 2 main things, we're going to talk about what volume profile is based around so you can understand it. Volume profile is literally auction theory. And what is auction theory? Think about this. Let's say you're at an auction, an item goes up for bid, right? That item goes up for bid. And then you have that guy yelling shit like blah, 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 keep it whatever, right? Liquidos, can you answer that question from Glenny about Geo's thing? Thank you. But when it comes to volume profile and auction theory, right? You get that guy to come up, start talking his jibber jabber, 45, 45, 45, 45, right? That first item, let's say nobody likes that damn item. What happens? That auction finishes very quickly. No one bids on it, right? No one starts throwing in money, right? So you have to think of those auctions similar to the low volume nodes, right? The low volume nodes are going to be the ones that look like, well, this is a very big, we'll do 15-minute, maybe there's better looking ones. Sorry, let it load up. Low volume nodes are going to look like this one right here, this little section right here. And at low volume nodes, what do we look for in terms of price action? VP, I recommend 15-minute and 5-minute. Mostly 15-minute. You can obviously look at it on bigger time frames, such as the 4-hour, the 1-hour, the daily as well. Those all work relatively well. And they work in the same capacity as what I'm teaching. low volume nodes, right? When you hit said low volume node, what do you look for? Mark the same situation where a item does not like to stay on the auction stand for a long time. Actually, it's not a slowdown, but it doesn't want to be there for a long time, right? So the price, similar situation, the stock price doesn't want to stay at a low volume node. So it will either reject or push right through. So that's what we look for, right? It's the same, that's the one. That's the thing to take note of. Low volume nodes are going to be the absolute pinnacle, in my opinion, of volume profile. It's not your value area high. It's not your value area low. It's not even your freaking POC, if I'm being quite honest. But those low volume nodes act like rejections or accelerations through because the stock price does not like to be there. There's a very simple explanation to it as to why. Because that is not considered fair value. If it was fair value, people would be bidding at that area, right? High volume nodes are what is considered like fair value because you have so much people trading it at that price. That's considered the balanced area within the market, right? Which is why we typically don't like to trade it. So you know how we always think about it like this. For those who know what value area high is and value area low, what is that section in between? That is going to be the 68%, or technically most people put it at 70%, but the actual number for a bell curve distribution is like 34 and change. But that's the standard deviation, right? So that middle area is going to be that 68 to 70% of the volume traded on that time frame that you have set. And typically you see people, oh, we reach value area high, so they go short. We reach value area low, so we go long. It's a very similar concept, because we go short or long at those situations, right? That's the very absolute basic of volume profile, guys. You look for low volume nodes, you look for high volume nodes. High volume nodes are going to be your choppy, slow areas. Low volume nodes are going to be your fast reversal or acceleration areas. Boom, baby. That felt good. That's the shit. That's the secret sauce. Yeah, I know. I'm on fucking fire again. I'm feeling myself. Three out of three, killing that shit right now. Yeah, pair the low volume node with a gamma level, a positive gamma level. Ooh, perfect rejection. Pair that low volume node plus a positive Gex level plus a fucking Fib retrace for shorts. Boom. Boom. That is my absolute 100% will take that trade every single time without fail. That is one of the setups that I will take every damn time. Every time. But now we get into Fibs. We get into Fibs because I haven't taught that yet. But obviously, I feel like a lot of people kind of already know it. But now let's get into it. Right? We've covered Vanna. We've covered the footprint. We've covered volume profile. Let's get into Fibs. Let's get into it. Fib retracements. What do we look for? If you have Fib retracements and you don't have it set up like this, go ahead and set it up like this. There you go. You have zero. Take a screenshot right now. I'll leave it on there for like 10 more seconds. Take a photo, you know. I know this is like a deja vu moment, you know, teaching this is back to the OG setups, you know. But well, we're on a fucking heater today. You feel me? We're on a damn heater today. But yeah, take a screenshot for those who don't have it. That is the setup that I have for VP. I mean for Fibs, sorry. So Fibs, basic, super basic. If you're new to trading and you don't know what swing highs and swing lows are, Google it. I ain't showing you that shit. Google it. That's the most basic. Google your swing high to swing low, and we'll get into it. All right. So obviously, perfect example of Fibs is my swing from yesterday into today, right? Why did I swing those? Fib. Fib. Big fib. Technically, this fib is still valid, but we took profit because we're fucking absolute geniuses. Here we go. right? Swing high to swing low on the daily. Let it load up. Look at that. What did I just talk about? Fib and VP. Those two things. We have a low volume node. We have fibs, golden short ratio. What did we do? Yesterday, we got into swings at the end of the day, 1250. It took puts, 472 puts for January 19th at 2.3. This morning, we closed them at 3.1, 3.01, or something like that. A good old 35%, right? On 2 week out contracts. It's not like, obviously, we all know I'm not the fucking biggest percent winner. I don't want to hear it. I'm sick of it. Not really. I could really care less. I got thick skin. You can make fun of me all you want. I could care less. But anyway, back to what I was saying. This is a golden setup that I will take every time. Luckily for me, we sold off before market opened and we held that at market open so I could get the fuck out. I'm not a greedy bastard, so I sell out like a pussy, whichever one you want to call it. Being a smart, not greedy bastard or being a pussy, whichever one fucking floats your boat. Yeah, getting tang. But you kind of feel, you see this? You see this? I'm vibing. We vibing. We got the cool ass lights in the background. We got a new office set up. We got a good ass class today. Yeah, I ain't gay, but 20% is 20%. You feel me? Damn, this is recording. I just said that out loud. Yeah, I mean, dude, the thing about like learning and trading is like you got to make it fun. I mean, we all dread school for a reason, right? It's like the learning isn't fun. It's not made to be fun. But when you have a good, I'll never forget. I was lucky. I had some good teachers in the past. One of them has helped me, but and helped me a lot through the past few years. So, and he made learning very, very fun. Oh, I drew it out, but oh yeah, so that's how you draw it out. Shit, I just fucking going on a rant right now. But that's how you draw it out. Swing high to swing low. Wait, let me double check that. Yeah, swing high to swing low for the short, right? So SH to SL equals short ratios, right? Short ratio. If you do SL to SH, swing low to swing high, you get long ratio, right? Now let's talk about the setup. How do I utilize the fibs to make trading simple? Number one, I got lucky, so I only took half size, but okay, so if there isn't a zero at the top or bottom, okay, we're past footprint for now, so let me finish this fib rant. So with fibs, right? Swing high to swing low, you get your shorts. Swing low to swing high, you get your longs, right? Now, how do you utilize that golden ratio? My picture perfect setup, in my opinion, for fibs is at the 0.618, this one right here. This is going to be your initial entry. This initial entry is going to be half size, right? This, because occasionally it can reject here and never touch anything above it. So I take half size positions. At this one, right, this line right here, the 707, this is going to be your size in, right? This is where you size in now. You add your full size. Then this one, the 786, right, this line, this is your stop loss. Boom. You have a trade completely defined for you, right? Stop loss wise, you can close it. My suggestion is wait for a 5 or 15-minute close above. Right, that's going to be a 5 or 15-minute close above that top 786 level. And from the 786 level with that stop, what you can do now that you know the footprint, you can see if any of those candles that closed above the damn fib, right? Any of the candles that closed above the damn fib, let's say you're in the short in this situation, if it closed above the damn fib, right? What are we looking for? If it closed above the freaking fib and it has a negative delta, manage your risk. Choose for yourself whether or not that negative delta is meaningful enough on a green candle close above the fib, right? If that green candle carries negative delta, is it a meaningful enough amount of negative delta to hold, right? So manage your risk. Now you have every single tool there. right? If you get your stop loss, but you don't want to sell out because you're a stubborn fuck, what do? Find reasons. Start fishing for reasons. Don't redraw your shit. Start fishing for reasons with true order flow, right? True order flow. Keep that in mind. We're using the footprint. We're using Gex. Okay. Boom.
Boom.
Y'all feel? Y'all feel? I feel. Did that make sense? Right? If your stop loss, you get a green candle close above it. See if that green candle carries negative delta. Just guess freaking what? That one might just be the one that is trying to fake everybody else out but you. Yeah, you might be like the fucking like Neo from the Matrix, bro. Ooh, dodging shit. But guess what, guys? We're done for class. That's 40 minutes of straight banging. Fuck, that didn't sound right. Anyways, I'm not going to end it right now, but I'm just going to stop the recording and do an outro. Thank you for tuning in. It is Sheen Trades, co-founder of TraderLink, and as always, keep moving forward.